All right, folks, welcome back. We're going over market maker models in this video. Market maker models, very cool concept, honestly. When I started learning it, it's pretty cool. I've learned it recently. I guess you could say about 2, 3 weeks ago. But here I am reteaching it. But let's go ahead and give you the verbal explanation of the market maker models. The verbal explanation for the market maker models is basically I can't really explain it, but it isn't like a formation. It's not like an order block plus a fair value gap plus a liquidity purge. It's not that. It's something totally different. It's like an actual formation and pattern in price. So there is. Let me draw it for you. I think if I draw it, it'll be way easier for you to see. So let's pull price up a little bit so we can have an actual, thing to draw on. Okay. Yeah. We have first an original consolidation. ICT calls it original consolidation. Okay. And then what you have is you have sell-side delivery. Okay. But if we draw that back, right, what it'll look like is it'll look like this. Okay. And come back up, it'll be like this. Down, up, down, up, it'll look like that. Okay. So looking at this, okay, let's go ahead and mark out what it looks like. So here you have the original consolidation. This right here is, if I can mark this any kind of way, we'll mark this as the original consolidation. Okay, the original consolidation. The reason we call this the original consolidation, because sometimes what price will do is it'll come back and return to that. Like literally, it'll literally come back down and return to this original consolidation to push price higher. Very cool, isn't it? I thought the same thing. But with all seriousness, let's go into the anatomy of this. Okay, so we have the original consolidation, right? This is the origin. This is where it really begins. That's why it's called the original consolidation. Okay, this is a market maker buy model because the final move up is a buy side delivery move. Okay, because you have a sell off first, and then the final move is a buy move. So this is the market maker buy move. If I can put it into context, I can just say MMXM. Okay, that's the abbreviation for this. Let's take off the border right there. So this is the MMXM, or the market maker buy model, or MMB. Let's jump into the sell side delivery. Okay. After the original consolidation, for the market maker buy model, there will be a sell side delivery occurring. Okay. After the original consolidation, there'll be sell side delivery, but not just for any reason. It's delivering into something. It's going into something. There's a reason why it's coming into something. It can be like a higher time frame order block. It can be like a fair value gap that's all the way over here. It can be an inversion, some point of reference. You get what I'm saying? It can be anything. Fair value gap. It doesn't matter. Okay. So we can say this is like a higher time frame fair value gap all the way from over here. Okay. If I can even draw that far out, let's see. Yep. So let's say it's a fair value gap all the way over there. The original consolidation is going to push price down into this higher time frame reference point, or this institutional reference point. Okay. Looking into the anatomy of this, you can trade this. You can trade both the sell side delivery, or the sell side of the curve, and the buy side of the curve. Okay, that's what you call this. So the sell side delivery, or the sell side of the curve, will be this down move. Okay, buy side of the curve will be the up move. Very simple, nothing hard at all. Looking into the down move here, you see how we have these little movements here, boing, boing, boing. Okay, what do we call those? You can let's get to the fancy terms first. What we call this is first stage accumulation. Okay. Now when we do that again, it's then called second stage reaccumulation. Okay, because it's doing it again. Okay, it's doing it again. So we can say, I don't know, we can maybe say there's a mitigation block right here or something. We don't know. It can be, we can say order block. Why not? Maybe there's an order block right there. That's your first stage of what? Of accumulation. Okay. First stage accumulation. So we put a text box here, and we say first stage accumulation. Okay. The reason we call it accumulation because the real move is the up move. This is the real move right here. This right here. Bang. That's the real move. okay? Because we're accumulating for this, okay? That's what we're accumulating for. We're trading down to a discount for that large up. But zooming back in, okay, that's your first stage of accumulation. Second stage can be, I don't know, it can be a, what do you think we should do for this? Like, it can be literally anything. It can be a fair value gap, an order block, a mitigation block. It can be a implied fair value gap, an inversion fair value gap. It can be a liquidity void. It really doesn't even matter. Or you can say an volume imbalance. Why not? Let's say it is a volume imbalance. Coming up into this volume imbalance, this would be your second stage reaccumulation because it is a second time accumulating. So we will call this second stage reaccumulation. Okay? Very simple. Very, very simple, right? Is it simple? I hope I'm making it simple for you. There's right there. So first stage accumulation is it coming into this order block. You can take your cells there. Second stage reaccumulation, keyword reaccumulation, is it coming into this fair value gap before finally dipping down into this higher time frame reference point. Okay? This is just an example. You don't have to use an order block and a volume balance for your first stage accumulation and your second stage reaccumulation. You don't have to do that. All right. Going back into this, price has bounced off of the what? That higher time frame reference point or that bullish fair value gap. Look what we have there. Oh wow, market structure shift. That shows that the buy side of the curve is now unfolding. Okay. So if we can set this as a swing high, that's now a market structure shift. Okay. This fair value gap here. Price comes into it. Right along there. Let's see. Fair value gap. Bang. So there's your fair value gap right there. Let's drag this over so this won't mess with us. So this would be your what? This would be your first stage distribution. So if you draw that out and wait right here, that's your first stage distribution. Did I spell that right? I feel like I spelled that wrong. No, I spelled it right. But that's your first stage distribution, okay? The reason we call it first stage is because that's the first time it's distributing, okay? And then again, we come right back down. Again, so that's your whatever PD array or whatever institutional reference point is right here that is tapping, that would be your second stage redistribution, okay? Since we're doing it again. Second stage redistribution. Very simple, right? Because we did it once again. So your first stage distribution was here. Second stage redistribution was probably right here at, I don't know, I guess you can say probably, it could literally be anything. Any PD ready use spot, it can be literally anything. Okay? It doesn't have to be a specific fair value gap. It doesn't have to be a Reaper. It doesn't have to be a gray pool. I'm going to teach you about gray pools in a minute, so don't confuse yourself with that one. It can be literally anything. It can be consequent encroachment of a wick. It doesn't matter. Whatever a PD array or anything that you can use to enter off of, or that is like an institutional reference point, and it comes back down into it, that is whichever stage of distribution that is. If that's the first stage, it's the first stage. If that's its first time, that's the first stage. If it does it again, that's your second stage redistribution, okay? And here, it comes down again. Bang! That's your third stage redistribution. Okay? Right there. You know, what can we say this is? We can say this is a, I don't know. Well, what do you want to say it is? Let's I don't know, BPR. We can say it's a BPR. Sure, why not? Balanced price range. Came right into it, bang. And boom. There's your push higher. Pretty simple. Very, very simple. I hope I didn't make this explanation too long because I'm going to be going into the candlesticks next because this needs a pretty good explanation. This teaching deserves some time in order for you to really understand it. But deleting all of this, right, we're just going to wipe it away. What? It's gone. It's gone. I literally just slashed my hand across my entire screen. Now, okay, let's look at this. See this, all this accumulation here? You know, let's jump on a 15-minute just to make this look a little easier on your eyes. So you don't have to be looking at stupid candles. Okay. So looking here, this is a market maker buy model. We have the original, oh wow, why is it doing that? We have the original consolidation right here. Bang. Okay. We're like, why did price head up? Yeah, it headed up, but it headed up to manipulate. Okay, those are two different things. Headed up to me. This is still a market maker buy model, but all it did was it just headed up first to manipulate. Very simple. Just nothing hard. Okay. What did it manipulate into? See this liquidity pool up here? This entire thing right along there is liquidity pool. If I can even drag it higher. The entire thing is liquidity pool. What price did is came and took out that liquidity pool to then come back down and deliver the sell side of the curve. Right there. Okay. Right along there. So jumping back down onto the 3-minute and going back to, I think it was the 18th, which is right now we're back at the original consolidation. Going here, okay, let's really pay attention to that. Our first stage of accumulation is here at this rejection block. See that? That's your rejection block right there. Right along, if I can see, rejection block bearish, yep, there it is. Here's your rejection block. This is your first stage of accumulation, okay? Why do we call it accumulation? Because it's a market maker buy model. So with the market maker buy model, there's going to be an original consolidation. There's going to be sell side. There's going to be a sell side delivery first, then a buy side delivery. So whatever comes first, whatever side of the curve comes first, that's going to be accumulation. And then the other side of the curve that comes next is going to be distribution, because that's the final move of the actual market maker model. Very simple, right? Nothing hard. Is it hard? It might be hard for you to understand, but hey, I'm just trying my best to teach you. 1 minute. Well, I don't think I can go into 1 minute. Anyways, looking back here again, that's our first stage of accumulation right here. You know, let's mark it out just to keep everything in your head going. Okay, right there's your rejection block. So this would be what? This would be your first stage accumulation. Okay, right there. Your second stage would be right around here at that fair value gap. If I can even mark it correctly. There's your fair value gap there. So what would that be? That would be your second stage reaccumulation. Reaccumulation. Bang. Okay. Now I bet you're like, hold on. If the first, delivery is trading into some sort of institutional reference point, aren't we supposed to be trading into something? You're right. Let's jump on the daily and see it. We zoom into that same area. What is price going into? That daily fair value got there. So we draw our quadrants on here just for, extra analysis. We draw that out. Bang. Drop back down to the 3-minute. Okay. Go back over here. Here we are. We're back again. Back again. You see how we traded down into that daily fair value gap, the upper quadrant? See that? Beautiful, isn't it? Very beautiful. We traded down, right? And while we were trading down, what did we take out? We took out all the accumulated lows within this original consolidation. So since we do that, that's already a positive confluence. That's gonna be a no-brainer. If it consolidates, there's gonna be liquidity built up in here, and price is gonna have to take it out some way, somehow. And it's gonna be doing it in the form of a market maker buy model, as we see here. Price comes and take out these lows. This one here, bang, all the way over there, bang. This one here, bang, and even this one around here goes up there. It comes and takes out both of those lows. And then it dips into what? What does it dip into? The higher time frame daily fair value gap. What is it doing? It's respecting the upper quadrant. Key level. What do we do after doing that? Market structure shift. Right there. Get ready. Buy side of the curve is coming. Buy side delivery is coming. All right. So if we jump onto buy side delivery, if we look on a 3-minute, it was pretty. Yeah, it took a very long time for it to actually deliver. So we're going to jump on the 15-minute just for that reason. Wherever it is. Hold on, give me a little minute. Someone play some elevator music. Anyways, I'm back. All right, here we are. So this was the sell side of the curve right here. So if I can mark that any kind of way, I'll probably mark it up here or right back here, and I'll say sell side delivery or sell side of the curve, same thing. But for a market maker buy model, there's first going to be sell side delivery after the original consolidation, dipping into a higher time frame reference point. The first side of delivery that's offered, or the first side of the curve that's offered, is going to be dipping down into an institutional reference point after the original consolidation. Very, very simple, isn't it? So now that we know that sell side delivery was whatever the word is, was offered into a a discounted bullish fair value gap, we can now look for the buy side of the curve. We can now be looking for stages of distribution and redistribution. So let's look for that, shall we? Let's look for that. I might just jump on the hour because this sure was a pretty large movie. Let's jump on the hour. All right, here we are. Right along here. Let's hide this, shall we? Let's hide it. Since we're done with that. Actually, no. Let's delete it because I don't want to make my stuff too much. There we go. All right. So going into this, the buy side of the curve. Where can I say buy side of the curve? I guess you could say it begins right along here. So buy side delivery begins here. Buy side delivery right there. Okay, so now we now understand that this is the buy side of the curve for the market maker buy model. Our first stage of distribution is right here at this fair value gap. Bang. Throw the quadrants on there? Sure, why not? Just to look for extra respective levels? Sure. Came into the upper quadrant. Look at the candles. See that? Do you see that? It's amazing. It respects it. Closes right above it. So it should want to go higher. So this is our what? This is your first stage. First stage what? Like I taught you in the little what is it? The little anatomy I showed you. First stage what? First. Am I spelling that right? Yeah. First stage. I can't even see my keys. Wait, it's so dark in here. I'm literally recording in the dark. I can't even see my keys. I was typing just fine earlier. First stage distribution. There we go. Now I can see it. So price touching this fair value gap is your what? It's your first stage distribution. Okay. Going up here again, we had this order block and this fair value gap. That just changed the state of delivery. So right along here is your second stage redistribution. Second stage second stage redistribution. Bam. Into that what? Into that change of state of delivery right there with that order block. Pretty cool, isn't it? Pretty cool. So that is your second stage redistribution right along there. Then you have the third stage redistribution right here. Bang. Then you have then it just keeps going higher. At that point, you can keep adding on entries, but the first and second stage is really the only stage you used to be taking entries. You can add it afterwards, but you want to get in on the first stage and the second stage because after that, there's no more stages. Okay, you can call it more stages, but in reality, there's not any more stages because after the first and second stages, the PD arrays it probably won't start even coming into PD arrays anymore. It'll just like stop respecting them, and it'll just slow down. So the first and second stage of both sides of the curve, the sell side of the curve and the buy side of the curve, are the stages you want to be taking. So should I go over market maker buy model? I'm kind of contemplating right now while I'm recording. While the recording is here, should I go over? I mean, I already just went over market maker buy model, but should I go over market maker sell model? Sure, why not? I'll do it. I'll do it. I just had to think real quick. I just had to think. It's okay. I had to think, but I'll do it. I'll do it for you. All right. So right along here, let's jump back on hour. That looked way better on hour. Oh yeah, that looks way sexier on hour. Okay. So looking here, we have our original consolidation right here. Bang. Do you see it right there? Do you see it? Do you see it? And then what do we have? Buy side delivery right along there. So this is our buy side delivery right there. So what we can do is we can jump down 15 minutes or even 5 minutes and look for our stages of accumulation. So we have this first stage of accumulation right here into what? Into this fair value gap. See that? Right along there. Price pushes higher. Bang. And I'm sure there's the second stage of reaccumulation right here. Where you see that right in that little area, I think it's right along there. But this is your first stage accumulation right there into that fair value gap. I don't know if you can see it, but it's like right along there. See it? It's like right there. But yeah, that's your first stage of accumulation. And I'm sure your second one was around here somewhere. It was like right around there. I can't really see it, but it's right around there. And then sell side delivery begins here. Why? Why does it begin there? Like, what is the purpose? Why does sell side delivery begin here? I mean, clearly we can see it in hindsight because this was literally the highest high that was created after, well, before the sell side delivery. But look here. Do you not see that? Do you not see this right here? These lower resistance highs right here, and then we have these relative equal highs there. That's what price did. It was reaching into a high premium before selling off. It took out these highs here, these relative equal highs. Okay, did that. Bang! So sell side is now taken. What do we call this? Liquidity purge. Easy, right? Very easy. What do? We keep trading higher and higher into a premium all the way to all-time highs until we finally just stop. We finally just stop. Okay. Looking here, this is where sell side delivery begins, right along here. But it doesn't just start there. It continues. It continues. Oh boy, it continues. So we're gonna jump on the hour for the sell side of the curve. All right, here we are. This is looking pretty wonky. I'm not gonna lie. This is really, this is crazy. Seeing this like this is kind of wild. You know, let's jump on the back on the 15-minute. That looked way better than that chop. Yeah, hook, boy, way better. All right, so here we are. Did price come into that fair value gap? Wait, let's see. Because I thought it came into it up here. No, it didn't. Oh, that's sad. But right here, into this fair value gap, is your first stage of distribution. Right there. So that could have been an entry. That could have been a sell. Right there. That's your first stage of distribution. Come back down here. This is your second stage of redistribution. Bang. That's where you take your sell. Right along there. Or you can take a market structure shift probably in a higher time frame. And honestly, if we probably would have went to the hour with the 4 hour, we probably would have looked way different. Just how the way it formed and it delivered, because honestly, it was just accumulating most of the time. Yeah, it was really just accumulating. So looking at this, it's kind of weird, to be honest. I'm not gonna lie, it's very, very weird. But if you look during the sell side of the curve, we came and took out this high, so we'd be looking for price to push lower after this. And look at that. What do we have right here? We have a mitigation block right there. I want to set that as red because red looks very sexy. So that's your mitigation block. This would be, on this time frame here, this will be your first stage of distribution. And look, let me tell you this. It doesn't matter what you use as your first stage or your second stage. The only thing you need to get right is that original consolidation. That's the only thing you need to get right. You need to get that original consolidation right in that higher time frame institutional reference point. That's it. Okay. But there was no reference point here. The reference point that's here is it trading in such a high premium. That's the reference point. Okay, because if it's in a premium, you never want to buy in a premium. Very simple. So that right there is you don't even need anything after that. If you know that price is in such a high premium, that's your institutional reference point. That's your point of reference right there. That we're in such a high premium that we have to sell off some way, somehow. So we don't need a PD array or some sort of, candlestick formation here because we're in such expensive prices that we have to sell off and retrace to some sort of degree. And did we do that? We did. We did exactly that. So here's your first stage of distribution. And like I said, anything can be your first or second stage. Whatever you see first is your first stage. Whatever you see second is your second stage. Okay. This was the first thing I saw. So this is my keyword, my first stage of distribution. Okay. Right there. That was my first stage of distribution. Then this fair value cap. I was about to say fair value cap. Did you hear that? I was literally about to say fair value cap. But here is my second stage of what? Second stage of redistribution, because we're doing it a second time. Okay? Very, very simple, right? And then that's your entry. Bang, wee, all the way into what? Close to those lows there. But the liquidity pool is where? Yeah, remember I talked about liquidity pools? Where do the liquidity pools rest? At the bodies. You see all those bodies resting there? Now let's look. Did price come into those bodies? Yep. Yep. It didn't go into the wicks. It didn't go down here. It go down here. If you see an accumulation of bodies, that's a liquidity pool. That means it's not going to go to the wicks. It's going to go to the bodies. Did it do that? Do you want to see again? Do you want to see once again? This is the bodies right here. Look at that. Precision. Precision. Do you see that? Precision. Anyways, that was pretty fun. Honestly, explaining this was pretty fun, and I hope you enjoyed listening to me yap for how long? How long has this recording been going? I have no clue. Let's see. 25 minutes. This is probably one of my longest recordings, so enjoy it. I hope I gave you a pretty good explanation of market maker buy and sell models. I wasn't planning on teaching market maker sell model within the same video, but I'm glad I did because I had fun teaching you, and I hope you learned a lot from this. And, there's more to come. There's always more to come, and I'll be in this video here. Peace.